Dear listeners, welcome to Mark's Morning Call, real time, real markets.
Good morning, everyone. I am Dr. Jennifer. Good morning, Mark.
Good morning, Jennifer.
Today, let's talk about stock. As the new term starts, we are going to get everybody set up their portfolio buying stocks from day one. How exciting!
Yeah, no, looking forward to it.
Normally, whenever I started to teach equity class in the uni, I always ask my students where did they put their money. Guess what?
If they've got any money, then I guess they all put it in a bank account.
You're right. 1% of the people would say, oh, I invest in the market.
I think a lot of people don't naturally think about doing stocks and shares because they just don't know enough about them. And if you don't know enough about it, then you tend to be kind of thinking, oh, God, I don't want to put my money in something I don't know much about.
Yeah, exactly. Most of them thinking financial market is stocks is too complicated. Holding cash feel much safer. Since my students are just 19, 20 years old, it's understandable. When did you start to invest stock? Were you scared?
Probably when I was at university myself. No, I wasn't scared because I did enough research in terms of understanding why I was investing. And obviously, you learn as you go, and it's a lifelong pursuit in terms of understanding stock prices, stock valuations. But what I realized is that unlike some financial instruments like Bitcoin or things like that, when you're investing in shares, you're actually investing in a company. So if you like the company, then all you're doing is just saying, I'm buying a slice of that company.
You started very early. I only started investing in my 30s because I was really scared of losing money. Back then, I thought, let me stick to big companies, which can be safer. But stock prices really confused me. Some stocks were thousands dollar per share, others just a few dollars. For example, HSBC is now under £10 a share, but it's one of the largest banks in the world. So I remember wondering, just like many of my students do now, does a higher price mean a bigger company?
No, the thing about price, and it's one of the basics that we've all got to get absolutely sorted out straight away, is that the price is how much you pay for one share. But unless we know how many shares the company have, we've no idea about the size of the company, and we certainly don't have at this stage any idea about the value of the company or whether it's cheap or expensive. And so as a result, the price in itself really means nothing.
So you mean I cannot compare price with different companies?
No. If you look at kind of prices across different shares, probably ones that you all know about, as Jennifer said, they vary from maybe a couple of dollars up to thousands of dollars. But that doesn't mean to say that the one that's thousands of dollars is more expensive. Because, as I said, when we look at all companies, what you're doing is when you pay for or when you buy a share at a particular price quoted on the stock exchange, that gives you the right to or allows you to own one share. But obviously, if you're buying one share and there's only 100, you're buying 1% of the company. Whereas if you buy one share and there's 1,000, then you're owning 0.1% of the company. So the price just tells us how much we have to pay for one share.
Yeah, that's a quite an interesting point. In the class, I will bring up this example that Apple is now trading around $230 and Tesla is around $330 and Nvidia is about $180. So I always ask them guess who is the biggest company.
It's the point I just really raised, is that you just can't tell from that, because until we know how many shares Nvidia have got, how many shares have Nvidia got?
Okay, I just checked. Nvidia has 24 billion shares outstanding. So what does outstanding mean?
It just means the numbers of shares that you can buy or that investors can buy. I'm guessing that that means the total value of Nvidia must be now over $4 trillion.
Yes, I always think Tesla is the largest company, but actually not.
No, not anymore.
Yeah, the price is around 330, way higher than Nvidia 180. They actually only have 3.2 billion outstanding shares.
Exactly. So the total value of Tesla comes in at just a little over $1 trillion. So all these companies, though, are just enormous. But the important thing, I think, in terms of you listening out there, is that the price in itself is important because you compare it against what it used to be. So again, taking those two examples, if you look at the share price of Tesla, then it goes up and it goes down quite a lot. And so you can see whether it's relatively cheap or expensive compared to what it used to be. But you can't compare the price against Nvidia or any other company for that matter, because we don't know what proportion of the company you're buying for one share.
Oh, okay. I always followed the Warren Buffett's company, Berkshire Hathaway. How could their one share is become $755,000 per share? That's really high.
Yeah, and that's very interesting when you get a share price that's so high. Now, obviously, again, I think the total market value of Berkshire Hathaway is around $1 trillion.
Yeah, they only actually have 1.4 million outstanding shares.
Exactly. So, therefore, it's a great example of how, even though it's the most expensive share, I think, in the world to buy one share, then compared to most companies of a similar size, then the numbers of shares outstanding is much, much lower. Therefore, given that one share costs so much, then it means that you're getting a higher proportion of the company than you would if you were buying, say, an Nvidia or an Apple, as we've just mentioned. One of the problems, though, when the share price for one share gets so high is that just to get one share in Berkshire Hathaway is obviously beyond the reach of most investors.
So in this case, we always check the price and then how many shares outstanding in the market. Then we can calculate the market size of the company. And we call that market capitalization.
That's the market capitalization, correct. And so obviously we'll pursue all of these things in great detail in the coming weeks. But as we mentioned a moment ago, the most valuable company in the whole world right now is Nvidia. And again, we'll look at this in terms of why later in the program. But I think I'm right in saying is that the top 5 companies by total value in the company are all big tech US companies.
Yeah, maybe our students today can go home to check how big is Apple in total market capitalization. So we just confirmed that when you buy a share, you buy a piece of the business, and price alone cannot be compared among the companies.
Exactly. And just to re-emphasize that point, which I think is really important, is quite often people are put off by any financial markets or any financial instruments because they kind of think they're scary. But in the context of shares, what you're doing is that you are buying an interest in a real company that exists. And so when you think about some of the companies we've mentioned just today, Apple doesn't feel too risky to me. It's a great business, great company, you all own their products. And so remember, when you're buying that share, you are buying an interest in the fortunes of what I think most people would agree is a great company.
It reminded me when I started to do investment, I stick to all those famous company I know, such as HSBC or in Australia now, National Australia Bank. I banked with them, use their service. That's quite safe for me.
Yeah, I think that's pretty normal though when most people start investing, is to pick names they know, businesses they know. And as we'll discuss during the program, that's a pretty good tactic. It's much easier to decide you want to buy a share in a company that you can go and see, that you have some knowledge of the business they do. I think that also there's a big difference in terms of safety in the sense that the company's not going to go bust. But that doesn't mean to say that the share price is kind of protected and it won't go up and down. So, one of the biggest companies in the world is still Tesla, and it's really one of the most volatile stocks that you can see right now, where one day it's up 10%, next day it's down 10%. But this also kind of opens up, I think, the importance of time horizon and how long you're holding a company for. So if you're trading on a daily basis, then you have to accept volatility. If you're holding companies for many years, then obviously it's a lot safer.
Haha, that's me. My son always laughs at me. I'm famous for buying stocks and holding them forever, never selling.
Yeah, but Jennifer, there's a lot of very famous and successful investors who adopt exactly that same strategy. Warren Buffett, probably the most famous investor of all time, who absolutely lives by a buy and hold strategy.
Talking about a buy and hold as a good strategy, it makes sense for me because I'm definitely not a risk taker. I just did our investment mindset quiz and find my profile is balanced to conservative. It really explains well why I always stick to the safer companies.
Exactly. And that's the great thing about understanding yourself as an investor, your own kind of profile. And it'll be interesting to see what people come up with their own risk questionnaire.
Yes, once we know our risk profile, we can start building our stock portfolio. Mark, have you done the portfolio questionnaire to get your recommended stock list?
Yeah, I did. And, I did both the two exercises, and interesting in terms of, for me, it threw up, I wouldn't say really high growth companies, but certainly ones that had kind of good growth prospects. And as we'll discuss later in the program, then that risk questionnaire and deciding whether you're going to be in low risk, low growth or higher growth is going to be a crucial part of our learning.
Now let's wrap up. Today we talked about how buying shares means that you actually own a piece of the company's business. The stock price is important, but we cannot compare them between companies. It doesn't tell us the company size. We need to look at how many outstanding shares the company has issued and then work out the market capitalization for company size. That's all today. See you next week.
Brilliant.
Final reminder, this podcast is for education only, not financial advice. Our views are our own, and investing always carries risk. Please do your own research.